clearly Bitcoin price increased over time, so that could be adoption, right? Maybe an adoption-based valuation model, S-curve, for example. But then again, what drives that adoption? So for me, in this model, I did it a little bit different than the first model. I predicted the average value and I inputted the average value of each halving cycle. If you look at the S-curve, that's the percentage of adoption, the S. And it could also be the value if you apply Metcalfe's law. But if you look at that S-curve on a log scale, a logarithmic scale, you'll see that the growth of adoption or value is exponential until about 50% adoption. If Bitcoin follows the S-curve, like computers, like the internet, like etc., telephones, like you say, like any other technology, if Bitcoin follows that S-curve, its value must grow exponentially.
Anonymous Bitcoin analyst Plan B is confident that Bitcoin is currently in the middle of a bull market and predicts a major price surge is on the horizon. He believes that increasing investor activity and decreasing Bitcoin balances on exchanges are clear signals of an impending large price movement. Bitcoin has been steadily climbing throughout 2024, up 44% year-to-date, and is currently sitting just above $63,800. Plan B, known for his stock-to-flow model, remains bullish, particularly after key events like the approval of spot Bitcoin ETFs and the historical price movements following the Bitcoin halving. He compares the current $60,000 price range to Bitcoin's consolidation at $10,000 in 2020, just before a massive bull run. According to Plan B, Bitcoin is in a market cycle phase that typically precedes explosive price movements. He predicts the price could double by the end of the year. The coming months, he suggests, will be critical, as Bitcoin's price is likely to experience both significant pumps and sharp corrections, leading to substantial gains heading into 2025. As institutional adoption increases, Plan B expects even higher peaks, bringing Bitcoin closer to a six-figure price target. Before we continue with the rest of the video, do check out Daily 5-Minute Crypto Newsletter with all the latest crypto and Bitcoin news. It's a fantastic analysis of on-chain crypto data and breakdowns, and the best part is it's absolutely free. They'll cover expert predictions, breakdowns of on-chain crypto data, and any breaking news you need to know, all in a nutshell. Click the first link in the description and enter your email to join over 50,000 others in becoming a better crypto investor right now.
As an input in a very simple, linear, univariate regression model, it's very rough. It predicted 55K Bitcoin at the time when, as you said, Bitcoin was below 4K. And well, yeah, that was a very nice correlation. It's the correlation that's shown in the graph that you show. And well, a lot of people dismissed it right away because 55K sounded absurd at the time. But some other people loved it, and especially its fundamental nature. And well, a lot of discussion happened since. There's a lot of misunderstanding about the model, apart from very real discussions and critique that is very valuable. There's indeed this misunderstanding, and the wide predictions bands, the very rough estimates are one of those misunderstandings. Yeah, one thing I want to point out beforehand is that Bitcoin has an implied volatility or realized volatility, historic volatility of around 80%, which is very, very high. It's probably one of the most volatile assets on Earth. So, yeah, it seemed appropriate to refit it to see either, if the prediction was okay, still within the bands, and if the formula would change. So, first thing is and it's shown in the yellow line there. I refitted the model with 5 years of new data. So that's 60 months, and what we can see is that the average value over the last halving period of Bitcoin was $34,000, and that's below the $55,000 that the model estimated, but still very close from a modeling point of view, and especially if you keep in mind that the model was made and the prediction was made in 2019 when Bitcoin was below 4,000. That straight line, the value and the formula they haven't changed a lot. The parameters are still the same. The results are still the same. It predicts now 50K instead of 55K. It predicts 500K for the current halving cycle, and 4 million for the cycle after 2028 halving. But I think that's one of the misunderstandings, the wide prediction bands. On the other hand, there's also the fact that in this model, I did a little bit different than the first model. I predicted the average value, and I inputted the average value of each halving cycle. So if the result in the next halving period is anywhere near the result that we got last time, so for example, if the price is not 500K that the model predicts, but 300K, I would be more than happy. So one standard deviation is roughly 2x the model value, and divided by 2 the model value. So for this halving cycle, it would be the point prediction is 500K, and one standard deviation band is 250K to 1 million. And the 2 standard deviation band would be 3x and divided by 3. So those are the bands, and that's for the average about the period. So if we look back in 2028 and the average is, let's say, below 250K, that's out of the one standard deviation band, but it would be still okay from a 2 standard deviation point of view. But I would be a bit surprised by that.
Just yesterday, Plan B shared his latest predictions for Bitcoin's price movement based on market conditions for the coming months. He anticipates Bitcoin reaching the $70,000 mark, drawing on historical trends that show significant price pumps in October. Following that, he expects Bitcoin to hit $100,000 shortly after the election in November. In December, he predicts a massive influx of ETFs will drive Bitcoin's price up to $150,000. From January through July, Plan B foresees a series of events that will push Bitcoin's price from $200,000, with projections extending into 2025 where it could reach $500,000. He even envisions a scenario in which Bitcoin hits $1 million by the end of next year.
I think that's one of the big questions for this halving cycle and the years to come. Will there be diminishing returns or not? Because that would invalidate a lot of models and validate a whole set of other models. And that's the big question that every investor should answer for himself. I do not believe in diminishing returns. And I've been very clear about it. I do not believe in diminishing returns for the exact reason you're talking about. That the S-curve, if you look at the S-curve, we don't know where we are exactly. If we're at 1%, 2%, 10%, I don't think we're even at 10%. But if you look at the S-curve, that's the percentage of adoption, the S. And it could also be the value if you apply Metcalfe's law. But if you look at that S-curve on a log scale, a logarithmic scale, you'll see that the growth of adoption or value is exponential until about 50% adoption, and then it levels off. And so it must follow that if Bitcoin follows the S-curve, like computers, like the internet, like etc., telephones, like you say, like any other technology, if Bitcoin follows that S-curve, its value must grow exponential. So no diminishing returns until about 50% of adoption. And I really believe that. I also believe that I can understand why people see the diminishing returns. Of course, if you look at the data, you see it. Especially the last cycle was very off. But I think it's an outlier. Actually, if you look at no matter what model you take, the addresses, models based on number of addresses, model based on stock to flow, model based on time, it doesn't matter. You'll see 3 big outlier years. That's 2013, 2017, and 2022. So the big all-time highs of 2013 and 2017, of course, but also 2022. And that was too low. And so that, in my view, causes the data to look diminishing, where in fact we'll see exponential growth. But I'm not sure, and it will be that's very interesting to see next couple of years. Maybe we could go back a little bit to the chart before this one, because I love that chart. It shows so many things. It shows that indeed the most of the rise is just after the halving, and then it sort of flattens out. It's stable for 3 more years, and that happened 4 times now. I don't know if that's a pattern or random, but 4 times it's quite a structure. And then it shows the diminishing returns. So the diminishing returns guys would expect that green line to be below the brown line, somewhere between 100 and 200,000, maybe crashing below 100,000 even in the bear market. And if we just track this line, we'll know what there is. And the third thing you can see is that this wide prediction band between it is shown in this graph. It's the upper line, the yellow line, and the lower line, the brown line. That's about as wide as the prediction band can be. So you can almost see the 250K, 1 million prediction band of stock to flow that I just mentioned. So that will be very interesting. Going to that other chart after this. So basically here I try to dumb down stock to flow to its core, because there were so many misunderstandings, because it was too difficult for some, too much models, too much statistics, too much mathematics, and it was pigeonholed by others into deep econometric discussions about autocorrelation and co-integration, which is nice, but it distracts from the core. And the core, in my point of view, or my hypothesis, I should say, is that the halving increases scarcity, and that scarcity is valued by investors, either directly or indirectly. So they invest directly in Bitcoin because it's scarce, or they indirectly feel that scarcity because there's no supply and there's no market. You can't get them. So the core is the halving. And if you thus make a very simple stock to flow trading rule that says buy Bitcoin 6 months before the halving, and the halving is every 210,000 blocks. That's what you see on the x-axis there. So every 210,000 blocks, there's a halving. That's every 4 years. If you buy Bitcoin every 6 months before the halving and then sell it 18 months after the halving, the 2 years around the halving, you would outperform buy and hold Bitcoin. And buy and hold Bitcoin is that blue line. That's just the Bitcoin price. If you apply this rule, you get the green line. So you'll end up significantly higher than the buy and hold. And even more important, if you do the inverse, if you would buy Bitcoin 18 months after the halving and sell it 6 months before the halving, so you would hold it only the 2 years in between halvings, you would end up with the red line. You would decrease your value over time. And that, I think, is not random.
Yesterday, the head of BlackRock's digital assets emphasized that Bitcoin should be viewed as a risk-off asset as institutional investors increasingly adopt cryptocurrency as a global monetary alternative. Despite Bitcoin's recent correlation with U.S. equities, he argued that it's inaccurate to classify it as a risk-on asset. Instead, Bitcoin is a scarce, global, decentralized, non-sovereign asset that is not tied to any specific country and carries no counterparty risk. BlackRock manages exchange-traded funds that invest in both Bitcoin and Ethereum, with Bitcoin rising 49% and Ethereum appreciating 15% this year, largely due to the approval of ETFs holding both cryptocurrencies. Michael Saylor, co-founder of MicroStrategy and a prominent Bitcoin advocate, supported BlackRock's statements, which resonated throughout the cryptocurrency community. He highlighted the growing popularity of Bitcoin amidst concerns over extensive money printing, fiat currency debasement, and rising fiscal challenges both in the U.S. and globally. Key drivers of Bitcoin's price include the recent fourth halving and the approval of spot Bitcoin ETFs by the Securities and Exchange Commission, along with BlackRock's approval for its Bitcoin options, celebrated by the crypto community. Plan B remains optimistic, predicting that by April 2025, the U.S. could start building a strategic Bitcoin reserve, potentially pushing the price to $400,000 within 5 months. He anticipates a global race among countries to accumulate Bitcoin, excluding the European Union, which could drive the price up to $500,000. Furthermore, he expects that the incorporation of artificial intelligence in financial markets will push Bitcoin's price to $600,000 by June 2025. By the end of 2025, the fear of missing out among investors may drive Bitcoin to its peak of $1 million. However, Plan B warns that this rapid growth might not be sustainable, predicting a distribution phase in 2026 that could bring Bitcoin back down to around $500,000, with a potential bear market in 2027 lowering its price to as low as $200,000. What are your thoughts on Plan B's predictions for Bitcoin? Share your comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.